What time is it? Hello, everyone. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Back. It's tough to hit that high note up there. Anyway, hello, all you out in internet land. In Google Hangout land. Jeez, I've got quite a few people here today. That's kind of cool. The old lady is playing canasta. Actually, Rob, I've seen a bunch of people. Actually, I haven't seen in a while. I don't know whether it's because of my crazy rants here of late on social media and my call out to all TRI OGers. Or whether you're just here by accident. But I'm seeing a whole bunch of people I haven't seen in a while. So great to see. And actually, I gotta say, I'm actually pretty darn impressed. I've worked in the financial services industry for, basically that has been my life. I had a 2-year window where I sacrificed. I fell on the sword coming out of UBC, and I worked at an accounting firm for 2 years, and that was, oh my God, that was so painful. It was terrible. But other than that, I've lived and worked in the financial services industry my whole sort of professional life. And I've done a bunch of, money raising and stuff for various campaigns. Man, I remember one back in, what was it? I guess it was, and it must have been 2001, 2002, following the dot-com blow-up. But before 9/11 and all the insanity of that. So it was sort of like the summer of 2000, the winter of 2000, and one, right? And then the summer of 2001. That was an interesting time period. And actually, there's a lot of similarities with that and what happened there in 2018, 2019. The cycle had already turned, but the reality of life hadn't turned yet. And then, damn politicians come in and create things like wars on terrors and stuff, and definitely society pivoted then. Then once that happened, there was obviously no turning back. Anyway, so I do, and I think you might even argue that 9/11 and this COVID, I think they are actually very correspondingly respective pivot events. Correspondingly respective. Ooh, that's fancy schmancy talk. So actually, I kind of like that thinking. That actually works pretty well. So anyway, point of the matter here is, I have, we've been working away here through crypto and doing the TRI thing for quite a while, and the whole experience has basically been sort of virtual, and I think I actually see an opportunity. I haven't seen the same opportunity, relatively speaking, since 1992. Yeah, I'm gonna say right around there. And it's incredible because you all know my crazy ass story. I feel as though I am guided by the other side because fuck, I could tell you, if you leave it up to me, I haven't got a fucking clue what to do. 9 times out of 10, whatever I want to do is usually the wrong thing, and it ends up poorly. It's terrible. I hate that about my life. When I let go, and I let people like Joby, and I let people like James, and of course I let Jojo. I let them sort of drive the bus. It's remarkable how shit happens. Absolutely remarkable. So I think anybody who's been seeing my sort of rants on social media and stuff of late, I mean, we've done fairly well. I mean, fucking Doge just handed us like 70, 80, 90 G's or whatever it was. I mean, that was just stupid money. And hell, I almost had to fucking change my name there, right? That was kind of silly. And don't get me wrong, I don't think this silly party's over. I don't think it's over by a long shot. But at the same time, too, I see a really cool opportunity. And I really want to pounce in that. I think that areas of the market that historically have been highly valued and highly sought after are not right now. And then also, too, on that sort of long-term demographic cycle pivot, I really want to be invested in one country's assets and like hard, tangible assets because I think they're on sale right now. So there's that. And then there's this idea of this TRI place. And this TRI, it's a magical experience. It really has been. I mean, as I've said, when I let the other side drive the bus, it's incredible to see what's happened here. I mean, it's slow, and you have to be patient. And, I mean, I haven't got a damn thing to complain about at all. Not one fucking bit. If you ever hear me complaining, it's probably more out of, like, personal frustration. I'm at, like, when I'm angry at Elon Musk, what I'm really angry at is the fact that I try to do this sort of PMA karmic sort of, give yourself to the world, and guys like that don't. And I think they take advantage of the system, and that's the kind of thing that angers me. It's more moral than anything else. But also, too, to a certain degree. I mean, let's call a spade a spade. I mean, the guy's extremely wealthy, so to a certain degree, it's probably some jealousy. But anyway, that's here nor there. The point is I have been incredibly fortunate to be a part of this TRI experience. And I want to try and solidify it. Like, if it's just in internet land, if the website ever disappears, it's gone, right? I mean, these websites and, all this kind of stuff. But if we can actually, like, put it into, like, physical form, brick and mortar, and take advantage of a situation where if we put a little bit of effort in, we can actually create an asset that has a greater intrinsic value than what is actually been put forth, like sort of invested. So it's almost like there's a built-in rate of return. And in my opinion, I think these assets will become stunningly sought after. Just like, like I said, in the early 1990s, I lived here in Vancouver, British Columbia. Spoken like a real narcissist? Really? Do I come across as a narcissist? Do I? I don't know. Maybe I don't think I'm a narcissist. I don't know. That's an interesting point. Do you feel that'd be interesting? I mean, just everybody just be purely honest here, like this sort of TRI kind of thing. I don't want it named Brian Beamish. And in a weird sort of way, I keep telling my business partners, I actually want to try and back away from the personal label of this entire experience. And for whatever it's worth, like investment wise, this project that I'm working on in Hawaii right now, I'm going to put up about 15%. So I'm going to have a minority interest, which means I won't have a controlling interest in this. And really, ultimately, I'd like the property, and I'd like the institute itself to actually be sort of community driven, very much like crypto. So I'm curious. It's fascinating. Like this channel itself is a fascinating experience because I'm sure there's probably some people that just, God, they're sick of Guys like me. They drive you nuts. I fully acknowledge that. I totally do. I have such a belief in the process and in my education set to teach you that I might even come across as stunningly arrogant. But, in a weird sort of way, like watching Simpsons, and they had Lugosh out there, right? Lugosh is such a fucking pain in the ass. But hey, if he builds, Olympic gold medal winning athletes, Lugosh gets a hell of a lot of leeway, right? So I like to try and be lighthearted and not be so much of a dick, but I can't appreciate that when it comes to some things there just isn't any negotiation, and I'll be a real asshole when it comes to stuff like that. It's just like, the process is the process. Your opinion is meaningless, and that never changes. Also, too, what I notice is there are a lot of people that come on this channel and that spam the shit out of this channel. And I guess it's a profitable business model. I guess it is. But it doesn't make any sense to me how much time and effort is spent in the spamming of this channel. So I sit here in front of my post, and of course I've got the channel open, and I just see the spams coming constantly, and I'm constantly deleting them. And it's it's probably an algorithm. It's not even any human. It's all been pre-programmed, which is so sad. But I would imagine there's probably people that are angry that I keep deleting all of their shit. I spend a lot of time just filtering out the spam, and I do actually try to reply to a lot of your guys' comments, a lot of questions and stuff. I go out of my way to try and give you answers. I really do. So I don't know whether that narcissist comment is someone who just doesn't like me, or whether that's positive criticism that I have to change the message if it's coming across as narcissistic. So if anything, what the hell? Odd direction we went this conversation in just here. That's a good part about doing these channels is I'm running the channel. If you don't want to be here, you don't have to come. I don't care. There's no cancel. And the good part about me, right, is there's no fucking cancel culture here. Fuck you, fuck you, fuck you, fuck you. All right? You happy? If you don't like fuck yous, then, there's the door. I've done it. It's over. Not much we can do about it now. No cancel culture. This show just keeps going on. John Penn says, "No, Brian, I've been watching you for years. I don't dislike you." Oh, that's a bold statement. I don't dislike you. Thanks, John. I appreciate it. What was this? John said, at times, yes, hello, and I watched a lot of Sam Vaknin. I don't know who that is. Anyway. Interesting. All right, well, at least, John, you got balls to stand up and continue. So, actually, I respect that. But, nonetheless, I am who I am. I am very self-confident in the way that I speak. And actually, what ends up happening is that I end up actually listening to people and going, oh, that's so fucking cliche. And then that comes across as me being a dick. So I can totally see that. All right, so totally Rob, eh? So back to our original story. I was going to say that I'd like to sort of create a sort of a tangible sort of TRI. And we happen to have a gentleman, and I'm here in Vancouver. And my son, of course, you all know he's very special needs. He needs high octane support that is government mandated. So I could do things like pull him out of the support programs that we took forever to put in place. after Mom passed away. I could do that, but frankly, that's pretty darn irresponsible of me. So, what's sort of a happy medium? A lot of people here locally, and here in Vancouver, I just don't get it. The price of real estate, the economics have just gone absolutely batshit stupid. I mean, it's just utter stupidity that I can get like an oceanfront piece of property in Hawaii for 1/10 the price of a piece of shit property in just in sort of rural BC here on the coast. 1/10. Man, that's crazy. What the hell? I mean, I love my son dearly, but I can't afford the prices that they're charging here in Vancouver. And it's only because, it's the fear greed cycle. This is sort of the ultimate fear asset proxy. And of course, we've got this wonderful, convenient relationship where I believe my country has basically sold its soul to, slightly nefarious participants, sources of income. And this, in essence, and the people who are running my country, they're more than happy being whores. It's kind of a shame. It's a little disappointing because, the people that actually were born and raised here are not getting serviced well by this. The people that are coming in here and buying their citizenship and buying this standard of living are getting it free without any serious, they don't have any skin in the game. They can take advantage of our healthcare system, then turn around, walk away a year or two later, whatever. So, democratic principles, all that kind of stuff, right? All that stuff that we have our heart and soul invested in. These people can come, party here, have fun, and then just leave, right? A little disappointing. Anyway, doesn't matter. That's here nor there. The point is that I had to sort of come to a happy medium. And I found it fascinating that because of the tete-a-tete, and I actually kind of like it, there are opportunities. And so I'm not going to keep my capital here because I think the market is ridiculously overvalued. And actually, I would actually argue that this whole place here is actually set up for a stunning collapse. And the exact same thing happened in the early 1980s, a stunning collapse. And it was because interest rates started to head up. And oh, gee whiz, look what's happening with long-term interest rates. And now they're actually saying inflation is actually a real thing again. Imagine that. So, what's sort of a happy medium? What do I do? There are a lot of people actually that commute between Vancouver, sort of jet setters, if you will, and our local, I guess local for lack of a better term, our local sort of resort destination is Hawaii. A lot of people fly over to Maui for the weekend, stuff like that. It's very normal here. So, I happen to have a TA in our level 3 program who happens to be a 25-year veteran of real estate development in the state of Hawaii. I mean, come on, if that isn't a message from JoJo, I don't know what is. So, put the pieces together. He can find a piece of land that he thinks we could do some serious damage with. Like I said, I don't want it to be the Brian Bemis show. What I really want it to be is the TRI show. And I want all of you that have done well through TRI and you want to sort of be a part of this, then I want you to participate in this. And that's what all of sort of my rantings and ramblings of the past few days are. And frankly speaking, I mean, the crypto market is not in a bull market right now, so it's not like we're really missing a huge fucking rip-roaring market that I spend my time and effort on this. If anything, it's even better. I just work my stink bids, and I suppose we'll get to price analysis in a moment. and just let them work, right? Just let your money work. Don't be distracted. So as we go forward, I'm exceptionally pleased. I think I need about 80 unit holders, and right now I have 50 locked in. So that means I only need another 30 sort of solids. Brian, yep, I'm on board, and the financing's done. We can start moving forward. So I gotta say, holy shit, I'm pretty damn impressed. You guys wanted to come in, and this is great because it's gonna be you. It's all about you. And things like we're going to say like a good 10-acre property, 9-10 acres, somewhere in there. Yurts and the whole jungle experience, and a big house with media rooms and yoga rooms and the whole damn thing. I mean, I want this thing to be paradise. And a big thing like Sony, I know you and I were talking. What I want it to be ultimately is it's a self-sustaining environment. So things like we're going to grow fruit on the property, sell that into the local market, maybe even give it away to underprivileged people. All the TRI people should have access to these yurts that we're going to sprinkle throughout the property. The big house itself can be leased out or, rented or whatever the hell they do it, at just a staggering prices. I mean, it's remarkable the prices that they have. And it should be like self-sustaining. So that's the project. That's really what I'm super excited about here in the short term. And by all means, I'll be putting together more literature, crisping this up. It's so beautiful. Like, we can do this on the blockchain. We can release the funds as sort of milestones are met. So these developers are kept on queue. And everybody can totally blockchain this out. I mean, it should be actually a really cool case study in how you can do real estate development deals using blockchain and NFT. In fact, you know what? I want to call the NFT tokens, I want to call them, I'm going to call everybody like cornerstone holders, where you are basically buying a cornerstone of the real, the physical TRI experience. And I want like the token to be like a stone, a rock that just is never gonna go anywhere. So anyway, okay, so a little bit of backstory. Of course, I'm doing tons and tons of work. These are kind of the images I'm kind of thinking of what direction we're going in for sort of the big house, and then things like yurts. I don't think I have any. Well, anyway, the people, I am building a list of the people that are interested in, so it's super exciting stuff. I'm going to be working a lot on this over the next little while. Super, super excited. Okay, well, anyway, we don't really need to talk about that, but I do know there were a couple of people that probably popped in that were kind of like, what the hell is he going on about? So this is the kind of stuff that I've been working on. And I'll crisp this up, and, obviously it's going to be a very professional presentation, so... Anyway, that's sort of what I've been working on of late. As for the market, I think really simply put, I think you probably heard a lot from me of late, sort of saying that, don't chase, don't chase, don't chase. Unfortunately, when you're in a really big rip-roaring bull market, it's the last thing in the world you want to hear is from some clown like me saying, no, you can't buy this, you're going to get yourself in trouble. So the backdrop that I always talk to all of you people in is thinking, all right, this is going to end badly. So what's sort of the way that I can talk to these people where it's the least amount of pain? Obviously, Anybody who was buying up through this event through here, this happens to be Bitcoin. And really, you might even argue almost basically through the entire first quarter of this year, they're pretty much underwater now. It's going to be a tough, tough slog for these people. I'm not going to sugarcoat it. Probably, if you actually could do like a sort of on balance, added up all of the trades up all through here and what was the dollar figure, my hunch is this correction, whatever the hell it looks like, is probably going to equal the amount of accumulation through here. Sadly, this would be called distribution. And then as the public gives up and throws in the towel, right, it's going to look the exact opposite over here. And that's called accumulation. It's a accumulation distribution. It's a technical analysis study. So this is probably going to take a while to clean up. This is a shitload of distribution. Shitload. Probably also a really good lesson in that just because you have levels, that doesn't mean the market's gonna stop at certain levels. There's a trap in this business of starting to get to the point where you actually start like predicting what's gonna happen. And you start getting like an ego, and you know, maybe you had like 2 or 3 picks in a row, and then all of a sudden people are like look around going, oh, okay, what's gonna happen next, you know, kind of thing. And you know, maybe a tool worked for a little while, and then you fall into the trap. And trust me, it's an ego thing. It's like a human being thing. We want to be exalted. We want to be revered. We want to be, oh my goodness, this guy's shit stinks much, much prettier than everybody else's. So we end up sort of falling into the trap of, you know, I think this is going to happen, and boom! Market just destroys you. I don't think there's a lot of people that expected this violent of a meltdown. But I will say that this is probably a really, really good analogy of don't chase, don't chase, don't chase, don't chase. Ironically enough, you know, looking back in hindsight, we look and see all these cute little W's down here, and we go, well, actually, even through all of this, you're kind of like, man, so what? So, you know, the big sort of weekly breakout there, which ironically enough came basically last fall, what is that? It's about $12,000, $13,000, $14,000. That's probably your base here. And as I said there a moment ago, we got a ton of public participation in here. Just a ton. Of course, you know, this is all through. I think actually it would be in crypto's best interest to not let Mr. Musk get off scot-free here. He is culpable in this. He helped pump this market up into that Coinbase IPO. I don't think it's ironic. I'm actually a little bit surprised that people haven't made more of a connection. But I really do believe that he is to a certain degree culpable in all of this. And then, of course, you know, you might ask, you know, where are all the people that were sort of pounding the table to load up and, you know, selling newsletters and all that kind of stuff online? Where are those people now, and why are they not being held accountable? How about who's the guy? MicroStrategies. What's that guy's name? Man, he was just fucking over the top bullish all through the winter. I mean, the problem here, folks, is now we're almost talking 50% gains. You know, we have a bunch of people at TRI that like to follow fundamental analysis, and we're constantly pulling up FinViz and doing our FA research, and we're constantly seeing, especially the companies that we're interested in, because they're going to absolutely decimate it. But, there's Idera is probably a good example. So, boom, gets destroyed. Actually, nice double bottom. Maybe it's going to rally. But what usually happens here is, let's see what we got here. Yep. No. What I'm looking for is the lawsuits. Who's got one that I can just show the public here really quickly? This one actually doesn't look so bad. This is probably buyable because there aren't so many lawsuits flying. But usually when these stocks get absolutely ripped apart like this, oh my God, the lawsuits are just flying like crazy. So now, that Sailor guy, he's got to be careful, right? MSTR? Is that his stock? I mean, we're starting to talk some serious money. This is back in January. The damn thing was $1,200. Now it's $450. Wow, that's a pretty big drop, eh? Yeah, see, it really bugs me that they were just over the top insanely bullish. Remember, he was saying things like, well, if the U.S. government cracks down, we're just going to all pretend like our Bitcoins got thrown overboard. I lost them in a boating accident. Oh, no, don't talk like that. And unfortunately, Wall Street, when it sees that, it acts like that. The interesting thing about this chart, who can tell me what's the formation this is making here right now? So ironically enough, it's actually a bullish formation. So you should be pleased with that. Don't quit my day job? What are you saying, Kevin? Oh, no, that's Zach. Wait, you didn't like my singing earlier? Is that it, Zach? Raoul Paul just heard your 2013 BTC thesis. God. Raoul Paul, who's that? That name sounds familiar. Isn't that like a drag queen or something? Raoul Paul, 2013 is calling and wants its mid-cycle bear market back. Oh yeah. Actually, yeah, that's not bad. Yeah, not interesting. Yeah, we've been sort of talking about this recently, eh? Mind you guys are over here, so that's just gonna screw the screen up terribly. There you guys are. Put that over there. And actually, this is just a picture, right? We should probably give you the real-time picture, so instead of getting off on tweets. So we got a little bit of a rant in there for you today. I guess there's like two images. So that image that I just showed you there was from like tweet. This is kind of like higher time frame. This is a 2-day chart. If you're watching on YouTube, right? Yeah, there you go. Nice job, SBM. Descending wedge. Yeah, good job, Adam. Kevin, you're, Adam C. Adam, when he heard about the Hawaiian thing, he was like, fucking hey, man. Kevin, I think I haven't heard from you. I think aren't you an OG? I think you are. Anyway, if you're new to this channel, try and remember this. This is such a cool little just rule. Oh yeah, okay, the Real Vision guy. Okay, yeah, he's not the drag queen guy. What's the drag queen guy name? What's his name? Isn't it something like that? But try and remember this. It's so simple. If you ever see the market smiling at you, it's getting ready to take your money. Such a cool little rule. I mean, it doesn't happen always, but you're unfortunately going to find in technical analysis is nothing ever works 100% of the time. Because we're human beings. And what ends up happening is somebody finds something in technical analysis and like, oh my God, this is so awesome, it's so awesome, it's so... And then everybody else goes, oh yeah, what are you doing over there? Oh yeah, you're right, oh yeah, okay. And then they all start going, oh, that was so awesome, this is so awesome. And then the trade gets tilted, right? It actually gets too one-directional. Because everybody's taking the damn signal. And then somebody goes, hey, do you notice? Man, when that signal fires, the whole damn market goes that one direction. So that means that everybody's long. So what's the vulnerable side of the market? What happens if I just sell a little bit and sort of perk that bubble? Could maybe the market collapse because everybody is long and there aren't any more buyers? And all of a sudden the signal doesn't work anymore because there's just too many people in one side of the trade. Anyway, so you have to be flexible in this game. No doubt about it. You have to put away this notion that you are going to be right 100% of the time. You have to put it away. And it sucks because, it's the whole ego thing, and people like build careers out of, oh my God, E.F. Hutton says buy, so we got to buy. All that. The really good traders in the world, they don't operate like that. They know that they're going to be wrong a good 30, sometimes 40% of the time. The floor traders that I worked with, they were just scalpers, and they didn't have a problem being wrong like 45% of the time. Just as long as when they were right, holy shit, those winners, they were just monsters. It's a very, very tough life, this life of a trader. I don't know whether you even really want to be a trader, to be honest with you. I don't think most of you do. But nonetheless, we can all be investors. Investing is fun. Especially like things like little old lady plans. You realize that a little old lady who came in 2018 and bought in the down year as the market was collapsing. Little old ladies should have a 3 to 5 year time horizon on their investment, right? You could even bought like right at the top here. I bought 2,000, 20,000. I'm a little old lady. 3 to 5 year time horizon. Little old lady sitting on, even now, sitting on what? Almost 2 times her money. Or in this particular case, about a 50% return or so. Maybe higher than that. So the point being that you don't have to be a trader at this. You don't have to live that life. And I can tell you, if this is the top and we have to go through a period like this, probably most of you who think you are traders will get flushed out of the market through this. It just happens. It's the way that it goes. And then the bottom eventually comes in, and I'm sitting there doing videos with old timers, and it's kind of weird how that whole story with that Da Vinci guy went. How do you think those guys that were loading up long here, how do you think they're feeling right now? This is exactly why you can't chase, because now they're fucked. They're long up here, and there's nothing they can do. So painful, especially like Ethereum. If you bought all the way up here, who knows when this is going to get back up there. It might take months. Hell, it might take years to get back up there. Who knows? Anyway, point here is when he and I were doing videos, we were doing videos of Bitcoin right down when it was down here, and Ethereum was down in here, and we're like, that's pretty good time to buy. Not bad. Here, I don't know. Hopefully through the way up here, you got paid on a bunch of names and you made a bunch of money. It takes me forever to load it up and get it all pretty looking, so I'm not going to do that. But you guys all should be familiar with, where should we do it? Yes, we'll do it here. Hey, and look at that. I crossed 14,000. That's remarkable. That surprised me. So thank you, Twitter. I was surprised. There's 14,000 of you out there actually think that I'm worth listening to. I find that remarkable. A lot of the time, I'm just talking out my ass through this. I'm just having fun. But anyway, thank you very much for all the follows, I guess. What do I want to show you? The media thing. Let's see if I can quickly get to this. Come on, baby. You're down here somewhere. Anyway, I've been following this 4 or 5 year study on Zircon and sort of where are we in relation to longer term cycles. And I'm still feeling pretty much like on that message really hasn't changed. So, let's see, where is it? It's back here somewhere. I mean, hopefully you can see, man, we made a lot of money here through the spring. It was a fun little bull market. Yeah, somewhere up in here. There it is. So I still think that we're in this kind of environment, and I guess people are saying that he kind of likes this sort of similar thinking. This is Raoul Paul. Somebody said that this is Real Vision, I guess. Macro investor and Real Vision. There you are. So, dun, 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 dun. So I've been sort of blabbing about this for a while. I don't really know what it's to look like, but I actually really do like this thinking, especially with the way that guy, Musk or whatever, that's just stunk like, man, dirty garbage. Something just did not smell right about that at all. Yeah, I don't know how those people are feeling. That's the danger, right? So Julia Maya says MM Crypto. I think that's Da Vinci's buddy, right? I don't know how they would be talking to their audience right now. This is going to be really tough for them. I hope they don't have part of their audience. The problem is in capitalism is, like the princes of Nigeria and all those guys, they disappear. Remember La 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 La, I was making reference to those clowns. They disappeared because they know they're cockroaches. They know they're cockroaches. And they've already got their exit plan already mapped out. So as soon as the market breaks, poof, the cockroaches, they just disappear. But I don't know whether if this happens to be a top and, market has to go soft for 6-8 months here, I don't know how a guy like the people that are very, very vocal, very bullish of crypto, I don't know how they're going to fare here. It could be a pretty tough slog. And if anything, this is the reason why I don't go down those roads, is because I know we get into these kind of periods, and then what the fuck do you do? And so I don't go down that road. So anyway, so with that said, I actually do like the idea of maybe just a nice 6 months where, we just sort of backfill. This is what they would call backfilling. Could be very, very volatile. And also, too, and I kind of put tweets out to this effect this morning, although I'm not getting as many fills as I thought. I didn't get any fills on this son of a bitch. I thought I did, and Trex had my order, but I totally read it wrong. Motherfucking son of a bitch. So I got my stink bid sitting at like 1724 or whatever the hell Mountain Man was, and I think the low was like 1810 or something. Pissed me off to no end. And it's good old Trex, eh? Yeah. So there is Mountain Man. My bid, 1724 area here, and you can see I even did up like a picture of it. Just made me so angry this morning. But thought I got a fill on this, but I was looking at the wrong damn thing. Anyway, considering the way this looks, I think we'll probably be down there. So I'm not really in a big hurry. I think we'll get filled there. No hurry. Actually, the one I'm really super excited about that I really like is this LTO. Look at that beautiful chart. This is exactly what I said to you. If you get these just straight line meltdowns right straight down against the lows, oh my God, this is a gift from heaven. So that's the same thing as the ETH, right? These straight line move. Now, maybe we rally up to 50% rule and, you get like a double, but are we going to go to new highs tomorrow? I don't know. I do like the idea of us just sort of bouncing around here for the next 6-8 months, but I love buying down, top of value. You can see it here. I mean, we might spike all the way down, fill in this notch on the profile all the way down at $1,000. Fine, buy it. But this is exactly why you cannot chase. Don't chase, do not chase, and boosh, down she goes. But like I said, I am getting filled on LTO. Love it. So totally awesome. And if they want to swim this thing down against the lows, I'm not stressed about that one bit. I think I told you guys I got bids working on Bitcoin down below as well. Also, too, we did sort of videos of late with Willy Woo, kind of people where he was sharing video stuff. People on the site were sharing, and he was like, "Man, I'm coming in here, but I don't think there's a big hurry. This takes maybe the next 4 weeks, maybe even the better part of a month to turn this around. Sure, totally fine." Could you see, what I probably will see here, it wouldn't surprise me, is we're going to counter trend rally back up against these highs. People are going to get sort of lulled into, okay, well, everything's fine. And then bang, down we go. We make a new low, kind of like this. And everybody's freaking out again, right? And you just sort of stepping your way lower. We used to call this the long, slow grind of death. So, if you're in like a trading room or whatever, right? And, you see that channel and it's just like, right? The puke out is coming, right? This is a puke out candle right there. So, the puke out's coming. You just don't know when, right? And I think I did a video with you guys a week or two ago. I seem to remember, this right here. This is the same thing. It's identical. You can see. Look at the way this M's look like here. Look at what's happening here. It's identical. So in this particular case, this is the... and I kind of thought in this case, if you go back and watch this video, that they would put this bottom in through Tuesday, Wednesday, London kill zone. But they literally did it hours after I was done the video. So grind, puke out, right? And then away we go. So... once the puke out comes, then actually it's okay to buy, and that's sort of like what this was. A huge dump. What is that? 43, one candle all the way down to 30. I don't even remember when that happened. Everybody was just sort of awestruck. They were just like, wow, couldn't believe it. And I scrambled in to see if I had my stink bids working. I would have, of course, loved to see this dip down into here, but I guess it's kind of like ETH. I wouldn't be surprised if, I've got my order on this bad boy at that 1724 level. I think that's where it is. And I wouldn't even be surprised if the market makers were like, okay, well, we're going to start to see this. We're coming into Mountain Man level. Don't know whether we really want to fill these guys, especially over on Trex. They never want to give you fills on anything easy. So I would imagine they probably said, no, we're not going to fill this guy. And then that's it. Because I think I noticed like on Trex, this low is like 35, and yet on Stamp here it's like 30. So a huge difference. But anyway, I was a little bummed at that, but nonetheless, still working my order. Not really in any hurry. And I did get filled on some other things. So to all intents and purposes, well, the tweet wasn't correct about ETH. It was correct about getting filled on other stuff. In fact, actually, I bought some more Ubic recently. And actually, Ubic's hung in here pretty well, considering. Yeah, we're right back down against the bottom of the range again. I mean, some of these alts, they're coming off hard here. And that should make sense. We are in the corrections mood, and have this fun little plan on TRI, shitcoin 5000. Got a bunch of stink bids working. Didn't get any fills overnight, but you can see prices are starting to come off, so we'll probably start reporting fills on these guys as well. And like I said, the trade that I really like is the one that I'm super excited about, is I got filled on this LTO here, so we'll see how that goes. Okay, let's do broiler chickens questions, and then send you good people on your way. Doesn't look like there's too many questions. Oh, geez. Wow, holy shit. Oh, God, I've got a lot of work. Is it gone? No? That's it. All right, well, let's see how we do. Okay, so, Dear Brian, in March 2018, at the peak of the previous bull run, peak, maybe? There was 1658 different cryptocurrencies, while in February 2020, there were 4,500. How can assets perform similar to 2018, given that the influx of capital would need to be divided by a much larger number of coins? I would say, let's see, how do we say this? I think the amount of capital that's flowing into the pipe has increased dramatically. So, and that's the cryptocurrency space going from sort of venture capital to more senior capital. So the actual size of the marketplace is increasing. It's kind of like, you could have, just for illustration purposes, look at poor old Charlie, eh? I suppose we could talk about that in a bit, but you could have the crypto market either grow vertically, which would be like one story, like say Bitcoin. All right, up it goes, boom. And as long as Bitcoin price keeps going up, then the market cap and the size of cryptocurrencies goes up. So that's like vertical growth. Or you can have, horizontal growth. There's Bitcoin, Ethereum, Litecoin, all 1,400 goddamn coins. And it just keeps getting bigger and bigger and bigger and bigger. There's so many of them. And the interesting thing is over time, they're going to grow a little bit, right? So you can see, hey, look, they're getting a little bit bigger. And they're growing. More money's coming in. It's not growing nearly as fast as this with only one coin. But nonetheless, the entire market cap of this space is growing as each of these goes up a little bit. A lot of these are actually just purely valued off of this guy. So as long as they're just alive, their value will go up. But the point is that this is the industry going horizontally. And this is the way that I've always thought that crypto would grow, is that it will grow horizontally. Whereas, like I said just a moment ago, this is just one story, right? One story. This is a whole bunch of stories. So even though this is big, and wow, Bitcoin price, man, it's going through the moon. It can't equate to the size of this because this is a bazillion stories. So that's how I think the space grows. And that's how I think it goes from, one story, venture capital, and then there was a few more, back 2013, right? Get into Ethereum and the miners and all that, or I guess now the other POW coins. Ethereum came out next cycle. And then, next 2017, there's a ton of them. And then, through the following cull, a lot of these coins just disappeared, right? And you get big holes. Well, all those coins are gone, right? And as the cull goes through, a lot of these names, they just don't make it. Right? There's big gaps. Well, all of these, look at all these graveyards. They're gone. Right? So really you could argue that the market cap now for this thing looks sort of like this, right? Not nearly as full. All this stuff is all gone now. So not nearly as full as that. Then, new names come on, new IPOs, new issues, new stories, new Vitalics, right? New Richard Harts, new Da Vinci's, right? The whole damn thing. New Sens, new Sebs. New Collins, right? All bunch in that gets filled in again. And then Bitcoin starts going up and the whole fucking market cap just surges higher. All right. Oh my God, we're going to be huge. So this is really more a function of the industry itself. It's just getting bigger and bigger and bigger. How many stocks are there in the stock market? Does anybody know? It's a pretty damn big number. All right, I hope that helps answer that question. Number 2, are you familiar with the Wyckoff distribution theory? Sure. It is staggering to see how the BTC chart corresponds exactly to Wyckoff distribution events. Yeah. Really, this isn't out of the ordinary. This is just a typical head and shoulders. You could call that a triple top, quadruple top. Remember I said earlier, if you see the market smiling at you, it's getting ready to take your money. Well, it's all the same shit. Just 2 words. Can you learn these 2 words? It's just when you're going through this part of the bull market, people fucking throw this shit right out the window, and it drives you crazy. Why are you throwing it out the window? Oh, because people want to suck my penis because they think I walk on water because I said buy Bitcoin. And now I gotta keep the message going because I want more penis sucking. Please, will you suck my penis? Okay, Bitcoin's gonna go higher. Terrible. Terrible! Oh my God, get that guy off the air. Jesus Christ. There is no way Tide laundry detergent is going to endorse a message like that. I'm sorry. But ironically enough, and the worst part about it, the absolute worst part about all of this is oh, look at that. I think we got like 4 or 5 people dropped off. They just disappeared. But the worst part about this, right, is as soon I know that it is going to end exactly the same way as it always ends. As soon as somebody says this, what line do you think as soon as I hear this line, I know it's exactly the same as every other goddamn tout bullshit bull market. Uh-oh. Here's Mauricio Mombrini. I do believe this is counsel representing Big Brother. Sure. But Wild Man Mike 100, what I want you to understand is when you hear this one phrase, it's exactly the same as every other market ever. Thank you, Cole. Thank you, Anthony. So, heard lots of that through the spring. I still think that the whole damn thing was all about the Coinbase IPO. And it's fascinating how nobody in the market's talking about that. So that means to me, they got away with it. Perfect. Everybody's all concentrating on shitting on some idiot fucking... no, I don't want to go there. They're distracted. We've got guys who are running trading websites who are obsessed about swearing at this guy. Perfect. We pulled it off. Nobody is talking about the massive capital just basically hijacking that just happened with that Coinbase. So anyway, way to go, 1%. You did it. Okay, number 3. What was your average ROI before starting TRI? And what is it post TRI? Also, if you can give an idea, crypto ROI versus Stark ROI during your career. Oh, geez. Well, I would say that in the early 1990s, me just sort of starting out, lost money just as much as everybody else. Pretty much the same way. Over time, as things started to sort of gel, late 90s, life was doing pretty good. And, of course, client accounts were doing pretty good. We were living pretty good life. I mean, hundreds, thousands of % kind of idea. Because you do a deal, right? And you do the deal, you get broker warrants. Technically, there's no cost to the broker warrants. So if you cash out 50, 100 Gs, well, what is that ROI? I don't know. How do you even calculate that? So, early 2000s, got heavily involved in the mining industry. I think I've told you guys about Starcore. I think we got 300% returns on that investment, which wasn't bad. Basically got everybody in the 30s and sold out around $1. Lots of mining deals. I told you about Polymat. So, as I've said, ideally what we'd like to shoot for is a good 30% annualized returns. If you can do those kind of numbers, you're doing pretty good. Then, unfortunately, my wife, and actually what happened was the market broke in 2007, 2008, and I left, and, people got absolutely decimated. I took two of my larger clients with me, and we went to Interactive Brokers, and we just traded through that bear market and then the subsequent bounce and rally back up into the bull through that whole Chinese Olympics and stuff. And then following that, that was the bear break. And then following that, sort of I guess that was into the Canadian Olympics in 2010. So we were trading privately. Again, I would just simply say I like to shoot for 20 to 30% annualized rate of return. If I got those kind of numbers, I was happy. And these are on like $1 million accounts. So, clear like a good 100, 200 a year kind of idea. After JoJo passed, of course, basically I didn't even really do any quote unquote performance. Money, and really even to today, money doesn't mean anything to me. I don't care what rate of return I make. I just don't give a fuck. And it's weird. It's sort of like people in the financial services industry wear suits and ties, all that kind of shit. They always talk about ROI and all that kind of stuff. And through bull markets, they're like, okay, well, I'm going to do like 30% compounded quarterly ROI every single quarter for the rest of the time. And of course, the people that know how this business works, it doesn't work that way. You go through bull markets. I mean, what is the ROI of turning $500 into $800,000? I don't know what the fuck that ROI is. Can anybody calculate what that number is? I don't know what it is. And I don't even really care, which is so sad. Because, it's because I don't care is why I don't really fall into that whole... if I really bought the fucking Kool-Aid, I suppose it could probably be managing like billion-dollar funds and all that shit, right? I mean, I could sit and sell myself to the fund industry and all that, but I don't like that life. I don't like it. This little altcoin account on Trex that were managed, it was like, I think at the bottom there in 2018, 2019, it went back down to 25, 30 G's. After we took out about 150 or so. So now it's back up at $500,000. Is that ROI? Well, maybe yes, maybe no. But I don't really measure it that way. All I really want to see is number one, every single thing that I buy, every single trade that I do, I should be able to show to my audience, number one, the reasons for me to do it. Number two, the context of why I'm doing it within a larger plan. And then number three, of course, appropriate risk management. That's actually more important to me than like specific rates of return on money and stuff. I don't care about that kind of stuff. And I don't like it. It's like people who act in the marketplace based on tax policy. If you ever make a decision in the marketplace based on tax policy, you're almost guaranteed to lose money. Because the reason why you invest in something is because it's a good investment, not because of tax reasons. And usually people who make decisions based on tax reasons, the ideas are not good investments. So, can't really give you specific numbers. And actually, I guess that's this question. And, you might be like, well, fuck it, Brian. If you're not professional enough where you're not going to give me those specific numbers, okay, fine. I mean, I'm not going to cry if you don't want to stick around here. That's not the purpose of this site. The purpose of this site is not to run a mutual fund where you just invest passively in what I do. That's not the purpose of this site whatsoever. And, head off and, you can get your money working with, there's tons and tons of people that would be more than happy to manage your money. They're going to spit at you a whole bunch of, ROI numbers and rates of return for past performance, but it doesn't really mean anything to me. Ironically enough, in the 1980s, because of the disaster, the commodity top there in the 1970s, every single broker had to send out to their clients, stamped on it, past performance is not indicative of future results. So if that's the case, then it doesn't matter what your previous ROIs are. They're irrelevant. It doesn't make any difference whatsoever. And I always tell people in the trading circles, you are only as good as your last trade. That's it. So what I want to make damn sure is if that last trade is a loser, at least people look at the last trade that I did and go, well, he had a plan. There's his setup. He took the trade the way he was supposed to, and he got stopped out and lost money. Shit happens. That's actually what I strive for. So I don't know whether that helps or not, but anyway, that's my thoughts there. My simple suggestion to you, and just keep it as simple as possible. If you can get more than 30% annualized rate of return on your money compounded over a 5-year period, you have done better than 90% of all investors ever. So why not just use that as a really simple benchmark? And if you go and double your money on a yearly basis, then really you're done for the year. Come back next year. See if you can double it again. If you can, you've done better than 90% of all investors ever. What usually happens in this game, and I see it happen just right now, it's happening as we speak. Like think of Doge, perfect example. People are going, buy it at 20, 25, 30, maybe 35 cents, right? It zips up to 60, 70, 80 cents. Look how smart I am. Technically, that's a double. And then they'll ride it all the way back down. Now it's what, 20, 30 cents? Maybe it'll be at a bottom at like 10, 15 cents. They'll panic and they'll dump it at the bottom. And, well, that's the end of that dream. That's usually how this story goes. So the problem with that whole Doge story is that there was no value in any of it to begin with. So anybody who was sitting there talking value at like 1,000 sats, they're lying to you. They are bold-faced lying to you. And that's what made me so angry about Mr. Wonderful there, is that I never once heard him talk about what was the value of one Doge coin. Never once did I hear him talk about that. And that's the only thing that matters. I mean, somebody back me up here. Did he ever talk to us about what he thought the value of one Doge coin was? Somebody say something here. I never heard him say, well, one Doge coin, is it worth exactly this? And when you did hear him say exactly this, oh my God, the number was very, very small. No? Nobody's going to say anything? No. Okay, from members who shared their journey, what would you rate the average ROI per year is? And who were most profitable? LOL traders versus swing traders versus day traders. I mean, I can't speak for individuals personally. I can tell you of my trading. All three approaches are actually extremely profitable, just they're in different ways. Like LOLs, right? When we went through that face rip melt up there, they're loving life. I mean, it's so easy. when you're in those insane bull markets. I mean, it's really easy work. But when the market rolls over, you're going to sit there and probably just go back to sleep. I mean, that's what a lot of little old ladies do, right? Don't they do a bit of sleeping? No, those are the little old men. The little old men, they're half asleep. Speaking of which, we're ready for my nap. Swing trading, that would be sort of like my brokerage business people. And, kind of like the way that Sjord's trading the LTO and the Luna kind of stuff. Those would be a pretty good example of swing trades. And ironically enough, I think you should swing your ass right back into that LTO now. It's perfect. Day traders, I mean, it's funny. Like sometimes you get into big bull markets and Ethereum and Bitcoin, stuff like that. And people completely just forget about the day traders. And Kieran and Daniele's are sitting there going, oh, well, I guess we're not the popular table at the cafeteria anymore. I remember in high school, right? Depending on what season it was, you could tell which table in the cafeteria would be popular. So like in the fall, it was like the football players and the soccer players. Their table was all the popular table. And then in the wintertime, it was the hockey players. They got all the cool chicks. They wanted to sit at that table. I mean, it's just so cliche, right? So now that the market has rolled over and the insane bull has maybe been put back in the closet, my hunch is the day traders are going to start to come back to life again. And the interest in the day traders, because they're long and short, will start to ramp up. To say one is better than the other is not really accurate, because really it's more a question of temperament. I know for certain, and I've seen John do it, but my old buddy John Hoagland, he used to either buy or sell the New York kill zone and then literally close the position out at the exact opposite end of the market at the end of the day. Just monstrous money. I remember even our level 2 instructor, I think he told us one day a little while ago he cleared something like 20 or 30,000. I remember one guy I was trading with Top Step, and one day he took 77,000 from the market. And it was funny, the market broadcaster, Eddie, I mean, he couldn't stop laughing. He was literally giggling because I think he got a royalty on his trading. He couldn't believe it, 77,000 in one day just trading ES. So, it's not really like it's one is better or worse than the other. It's really a question of what's your temperament. What type of investor, what type of market participant are you? Some people are day traders. In fact, one of TRI's principals want to get him a little bit crisper on his trading. He come in, hang out with the professional day traders, and he's kind of like, Brian, honestly, I can't do this. These guys, it's too fucking boring. You just sit there and do nothing. And he's right. I mean, a lot of day trading it's so funny. It's like, you know who does really well at day trading, and it makes perfect sense? Anybody who likes watching the poker, and the guys, the way they're stacking the chips and they do it automatically, you can hear them going broop, broop, with the chips on the poker table. I mean, there's a whole part of our society that loves that life. And there's a whole part of our society that goes, God, how can they sit there for hours on end not doing anything? You got to figure out what type of person you are. That's really the answer to all this. So I hope that helps answer that question. I don't think there's really one that's better or worse. It's just a question of what's your passion. Then wrap your arms around that type of market and own it. And there's tons and tons of money to be made in all of these approaches. It's not really like one's better or worse than the other. All right, number 5. In the reading, Creating the Strategist, there's a prediction a bit outdated. Yeah, tell me about it. I wrote that back like in 2013, I think. So could you update the current prediction? Oh, God. Where do you think we will be at 21, 22, 23? Here's the excerpt from the reading. Using one proxy, the Dow-Gold ratio, we clearly see that our next cycle should be a fear peak and should occur between Q3 2017. Somewhere around. Yeah, and ironically enough, it actually is still there, Jose G. Because the way that I like to measure it is through the U.S. dollar index, right? This is Jerome Powell and what's Grandma's name? Yellen, right? Janet Yellen, the U.S. Federal Reserve, the hegemony currency proxy dominant force of the world, the U.S. dollar index. And ironically enough, there is Q4 2017, there is Q1 2018. I still think that was the historic pivot. And interestingly enough, off of this, actually the US dollar index has been a lot stronger than historically it normally would. So go figure. But I'm actually a US dollar bull. And this is more like, it's super important. It's tough to understand this, but this is more like one currency versus another currency. This is not Brian is a fiat currency bull. I think it's all bullshit. And they know it's bullshit. In fact, even Alan Greenspan said, this fiat currency system, this is a great way to confiscate the wealth of the public. So that's even Mr. Banker himself saying that this is bullshit. So go figure. So from this perspective, I still think that this cycle is, the pivot is actually still in place. And then to further bolster this thinking, fear, greed cycle, I think, we need to be thinking along these lines. And this is really difficult. And I had said this in the group this morning, is that they've made this incredibly difficult on us this cycle. And they usually do. Every cycle, it's exactly the same. They really fuck with the public. They're trying to, it's a crime what's going on here. It's very subtle, and it has to do with money, and it has to do with political power. So as a result, if you watch the Money Masters videos, Sharky, I see you here. If you could throw up the Money Master video link, it's a good reference. He always has it in his back pocket. You want to learn how money works in our society, watch that video. It's a good 2, 3, 4 hour video, so you ain't going anywhere for the rest of the day. So for us to really understand and be able to just, sort of really get our head around this, it's going to take a bit of work. This is not easy. And they're making it as difficult as possible. If the economy acted the way it should have acted coming out of the dot-com boom, it should, if we had a strong currency system, that is, it should have done something like this, where you have economic expansion. Stocks are nothing more than just a proxy on the economy. And as the generation moves through its peak earnings years, right, obviously the economy is going to be doing a lot better. And then as the generation moves into its retirement years, the economy is going to do worse. So technically a stock market should expand, should contract. That's what should happen. So the problem, of course, is that we have democratically elected governments who make promises. They don't balance budgets, have to live in this fiat currency world, which is basically a con job. So how on earth do you stop this from happening, which is supposed to normally happen? Well, what happens if you just dilute the purchasing power of this unit thing that you're measuring this in along the way, where you can actually get rid of this nonsense by just simply making more and more and more of these things. Right? That's literally exactly what we have done. So instead of the dot-com peak in 2000, which was there, instead of that, Great Depression, we come down here, we set a base, clean the economy up, and start the next cycle. They just keep money printing, money printing, money printing, and so we live in this world. So how on earth are you supposed to try and figure out what the hell value is in this world if they just keep printing more and more and more of these? Well, we could take this stock unit thing and we could say, well, is there any way we can measure this stock unit thing in an adjusted currency unit? So we take into account that money printing. And that is what this image is. This is our current economic situation. So if we take out the money printing aspect of this, put that like that, you notice that there's actually a lot of similarities between this cycle. This is historical. Whoops. This is like fact. This has actually happened. Right? Up, big bull market, peak earnings years of this generation, then them heading off into retirement, the economy unwinding, and hitting the reset. They called this the Great Depression. Well, we can't let that happen because there's a whole bunch of people that lost their jobs, and the guy who was democratically elected through here was like, we're not going to fuck with the currency value. The currency value is important. And so the bankers went, okay, well, if you're not going to fuck with the currency value, we're going to drive your economy into the ground. They drove the economy into the ground. He got run out of Washington on a rail, tarred and feathered. Worst villain in U.S. history! Of course, helped by the banksters and the narrative. And no politician will ever do this since then. I will not be the next Herbert Hoover. Every single politician since this time has acquiesced to the bankers. So the next cycle, this is Tricky Dick, came in here. He saw that, oh fuck, this is what has to happen here every, 35 years. So here we are, big growth cycle, 35 years. We got to do this. Well, let's take this thing off the gold standard. Well, that's one way to make damn sure that this isn't going to happen, right? The value of these units, they took it off the gold standard. And, at one point, gold was like $32 an ounce right here. And by here, gold was like $800 an ounce. So, very sneaky. They made sure this thing did not go down because they devalued this thing that they measured it in. Public doesn't understand that. Public sees, well, that's not so bad, sideways market. Now, this is the killer part about this, is coming out of this demographic cycle. And this is sort of similar to the way Klaus is acting right now. Is if we understand economic cycles, then at this point, you should go, all right, we're ready for a big surge in the economy. But what do the bankers do right here? They come out and Ronald Reagan says, well, we don't have to balance a budget. We can overspend. Now, why the fuck do you do that? We know that the demographic cycle is saying, guess what? There's going to be huge growth. Why did they need to juice it with Reagan justifying deficit spending? Well, obviously. And, the sad thing is that somebody took a poke at Reagan. There was an attempted assassination. Every time somebody tries to, or even successfully tries to knock off a U.S. sitting president, it's been by the bankers. There are connections to the bankers in all of these stories. It wouldn't surprise me if the bankers were the ones who took a poke at Reagan, and all of a sudden Reagan changes his tune. Oh yeah, deficit spend. Yeah, that's a good idea. I mean, it was the stupidest thing. If you believed in economics, This one event, Ronald Reagan coming and saying, it's okay for us to deficit spend our way out of this recession. That was the death knell right there. This was the death of the United States of America as we knew it back here. And remember, I was born right here. So, I mean, this is my childhood. I was spoon-fed this idea, right? USA, capitalism. And yet, it was literally at this point that the nail was being put in the coffin. The Hinckley families are friends of the Bushes. There you go. Oh boy. Anyway, I mean, what's so tragic about all that is Brady, right? I mean, that's the worst part about history, is that none of those Bushes or Reagans or anything, right? None of them are involved, but poor side people, they get abused. So anyway, here we are. People look at this and go, well, gee whiz, I guess the economy's doing great. But this isn't real. This is them completely fucking around with these numbers here. If you take out the fucking around with the numbers, which I know is probably a lot of people in the public, when they hear me say this, they just don't understand what the fuck I'm talking about. But if you take out the fucking around with the numbers, well, actually, that's what the stock market looks like. And interestingly enough, if you take out the fucking around with numbers, this is actually what we should be expecting over the next 10 years, 10, 20 years of our lives. Is that a bit of growth? What do you think? You can do both, Julia. You can do both. It used to be, the problem here, to be perfectly honest, Julia asks, why do you do M2 instead of M1? M1, theoretically, how do you say this? M1 represents all the currency and shit that you got in your pocket, and really, we're not really talking that kind of stuff when we talk macroeconomics. Really, when we did these kind of studies, what we were trying to figure out is the credit system and the money supply. Because remember, most of the money supply is just it's just an electronic notation. So what kind of money are we talking about? Are we talking about the $20 bill in your pocket? No. That would be M1. That would be the whole damn thing. M2, though, is more bank deposits and, Fed funds and all that kind of shit, right? Stuff that moves really quickly. They can adjust it really fast. Now, they've gone and fucked everything here. So you want to use M1? The problem with this here is that the Fed themselves have said they don't even really like using M2 anymore. And they've discontinued this data set. So this is actually even an old data set. And I don't even think it's updating. Like this, you can see, it says June. But my hunch is that really our path is more like this. It's not like this. This up here, you see the way it looks really, really uppy right there, just even over the past, what is that, since January, straight up like that. That's the non-M2 adjusted. That's the Fugazi, right? Because if we look at the non-adjusted, right, look at what we've done here. I mean, this is embarrassing. What the fuck are these people doing? This is like Elon Musk is running our economy. Economists don't know what the hell's going on. This is crazy. Anyway, so something along these lines. You see, this is non-adjusted. So, I mean, it just looks like a goddamn parabola straight up here. This is not going to end well, folks. I mean, it just isn't. It's not going to end well. I mean, what happens? It goes up and then bang, right? It goes up and then bang. I mean, you all see what's happening in Bitcoin and Ethereum, right? It goes up and bang. And the funny thing is, looking at this chart, who could tell me? I did it on Ethereum, and I'm trying to do it as we speak. Where am I going to place my buy order? Hey, Sharky, can you post that Money Masters video for me? I'd love if you could do that for me, sweetheart. Anyone? Where am I going to place my bid? Zimbabwe paper's actually looking pretty good, eh? Anyway, maybe I'm not getting through to you people. 61.8. And isn't that interesting how 61.8 is basically the U.S. housing market bubble, the George Bush Jr. bubble peak. Thank you, D-Born. You're awesome. Hugs and kisses. So, that's the irony of this. Just like fucking Bitcoin right now. You can see the Dow lose like 2/3 of its value here. No problem whatsoever. It's just all fluff. So sad. So, I don't know whether that helps you understand. I mean, these are big questions. The strategic planning part of the course, I'm not going to lie to you. I'm not going to sugarcoat you. They have made this extremely difficult. They should not have gone and fucked with the money supply. That is sacred in economics. Venezuela, Zimbabwe, the whole damn thing, right? That's sacred. You do not fuck with the money supply. And they have gone and fucked with the money supply. So, it's dangerous. I don't know what the hell the end game here is. This is really, really dangerous times we're living in. And I think I even said somewhere, I don't know whether I said it in this video or not, but I got to keep moving on here. I'm running out of time. I got to get off to Liam here soon. Okay, so is there in the reading? So yeah, I still think that we saw that fear greed cycle pivot. Nothing's changed there for me. I know it's going to be hard, and if anything, Jose, what I want you to do is I want you to walk with me through this over, let's say, the next 4 or 5 weeks. And let's keep talking about this. Just because we talked about it today, I don't know whether you're convinced or not, but let's keep revisiting this over and over and over. By the time I'm done with you, you should understand what I'm thinking here. Also remember, too, these fear-greed cycles, Dow-gold ratio stuff, this is forest through the trees kind of thinking. Too many people, especially if you're looking at Bitcoin price here in the short term, you can't see the forest through the trees. All you see is the trees. I'm asking this fear greed, these huge long-term cycle kind of thinking, and ironically enough, this still actually looks very much like it's on course. This is seeing the forest through the trees, right? Seeing the big picture. But I'm not saying you can say that, see this. It might be very, very difficult for you to see this right now. But ironically enough, a stab up into here, like this is 150,000 on the Dow. Well, given all the shit about the money printing, actually it makes perfect sense. Ironically enough, this is probably still right on course. The only difference is, I think we've pushed up here now, and corrections against these highs are actually that sort of that reset. Interesting, just for fun. Let's go see if we can pull this chart up in particular. Maybe I can do it off a weekly. Let's see what happens. And zoom out. We're going to have to do monthly. Thought maybe you could do it weekly. There we go. And then we'll do our channel. So there's that one. But I think the one that it's operating on is like this one. Yeah. So that's what I think's going on. And it makes sense because in essence our whole world, this fiat currency system, everything was put in place following the Great Depression here. Right? And this is where the bankers basically took over our society. So there's your channel right now. And actually that's not a bad forecast. I mean, this isn't precise. But you can see, as I said there earlier, I actually like the idea of corrections down against these old highs as sort of buying opportunities. It might not come into all the way over here. It's tough to say. I think probably, yeah, and actually I did one a while ago on the NASDAQ too, which was kind of fun. But my hunch is probably, yeah. So do you see how that's going to represent a reload zone? Actually, yeah, let's just do a reload zone. So, boom, there we go. We don't even need 88.6, so we'll get rid of that one. So, you know, the irony of it all is we talk about 3 reasons for a trade. Well, here's like basically 2 reasons, and they're both trade location. Horizontal support and resistance, and reload zones. I actually am pretty comfortable with that kind of thinking. No problem whatsoever. So that would be probably an update to that study. And interesting too, right? That you know, our cycle here, if we pivoted 2017, 2018, then 15 or 17 and a half years would be 2034, 2035. So that would be sort of right in here. So probably that's your top, right up in that area, right up there. So what is that? That's what does that say? About 100,000. Yeah, I'd probably feel comfortable with that. I wouldn't even be surprised if we go something like, you know, I don't know what this looks like, but you know, something like that, and like that, and like that, and like that. That wouldn't surprise me one bit. Probably 2 down the road. This should be a pretty important support line. So, yeah, I like that. Oh, that's perfect. Look at that. That would actually line up nicely. So there you go. That's actually what I would expect as our sort of path going forward, a little longer term. But whoever asked this, let's keep an eye on this. But that's sort of what I would think is going to happen here. I mean, obviously nothing's written in stone, but let's see how we do. So we'll just do quick review. Boom. Oh, fudge. Bang, bang. Oh, jeez. Boosh. There we go. All right. Something along those lines. Let's see how close we are. Boom, 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 boom. So our pivot was right in here. Actually, oh, that interesting. Was that here? No. I guess that was, I guess that was sort of in, yeah, I guess that was right in here. Actually, I do like that because that was a funny little event right in there. That window. Because really, wasn't that, I remember there was something funny that happened right through that. That was right through here, right? This right through here. You can totally see how that was like a total midpoint pivot here, right? This was basically that cycle pivot, right? Oh, and I remember this too. Man, our algos went insanely bullish right through here. I remember that like it was yesterday. So probably, and also too, I've been sort of passing around the site lately. I'm really big fan of like this concept. Never seen it taught though, so I have no idea what the name is. But it's like a tweezers kind of thing, where there's like one side, you get this consolidation, and then like literally you can replicate this angle and the line size on the other. So it's like, oh, but then this is a log scale. Damn. Well, that's not going to work. I got to go like this, like that, and then there. And so that takes you, yeah, right up into there. Actually, yeah, that basically corresponds with that kind of thinking. I also, too, do like the idea that the market's going to kind of go parabolic into the end of the year here. But it's interesting that, Who can remember that long-term chart that I was passing out there? The guy who did, was his name Benson or Burton or something like that? The 200-year chart. Or you need to be a dumbass like me to trade crypto on leverage, SMH. Okay, interesting. BB is the econ professor you wish you had in B school. What does that say? B school? What's B school? But the uni would never hire because he exposes the establishment. Yeah. Well, let's get the fucking Hawaiian Institute going, you cocksuckers! And of course, he's the only university prof who's gonna swear at you while he's talking to you. You sons of bitches! I remember, oh no, God, I get on these tangents. Okay, I gotta keep moving. Keep moving. So interesting, good conversation. You're right. Probably should update this. But ironically enough, actually, we're heading along this channel here. It looks like we're heading along quite nicely. Thank you very much. There's the top of that channel there. That corresponds with that peak there. So I think we're still right on schedule here. And we're, if anything, I really like this thinking. Use this trend line, a line off of that high. Use that as your pivot in the market, and any buy or sell signals are probably going to pivot right off of that line going forward. And you could probably do the same with corn and, crypto and shit. Okay, let's see what I got here. This seems like a huge stretch, and I could make sense of it with inflation. But this one is M2 adjusted, so I'm confused. Well, no, because we're going to head into a growth cycle. I don't know whether you know what a growth cycle does to growth assets. We've actually not been... Here's the kick in the pants, is that we have not been in a growth cycle. You people don't even know what a growth environment even looks like. Because these stupid fucking Bushes and all the, the housing market cronies. That remember that Chinese guy in The Big Short eating the sushi there, synthetic CDOs. They just diluted the shit out of our society. You don't even know what growth even looks like, people. That's what kills me about this. So you're going to see this. I remember I was there when I literally sat there and watched the fucking ticker. And you just sit there and you're in awe as the goddamn market just churns higher. And you're like, how is this justifiable? This makes no sense. And it just keeps churning higher, just relentlessly. Well, this is what growth looks like. That's what we got ahead of us here. I mean, it won't be as pronounced as this cycle, because this cycle, everything was set up. All the ducks were perfectly lined up. Our current cycle, it's more like that Japanification, where we've got just a world of debt overhanging us. And because they have to keep rolling out that bad debt, the relative growth of our economy won't seem as strong. So, I think I even did like sort of two scenarios for you on this, right? The flatter scenario is sort of the Great Depression scenario coming out of that, which I think is actually more of what we're like. And that's sort of like midpoint of this study. And the yellow in this particular chart was the baby boomers, that insane over-the-top cycle, which I don't think we're in for. But nonetheless, I mean, maybe if we are, that's what basically the tag up top there would imply. We'll see how it goes. Only time will tell, as they say. So this is that growth. I mean, this is what equities will do. Is it a question of the actual companies doing more business? I don't know. Is it a function of the bankers have to increase the size of the economy? So they will be lending out more money. So by definition, kind of like what we talked about, that first question about crypto, you could argue that if the banks go and lend out shitloads of money, I mean, you tell me, if we woke up tomorrow and all of the bankers, Joey Diamonds and all that, all of a sudden came to like TRI, and they were like, we actually had people coming in the lounge going, hey, we've got this $50 billion fund. We're looking for crypto projects to fund. Does anybody here have any crypto ideas that you'd like to get some financing for and get working on? This place would go fucking ape shit. Go crazy. All of a sudden, we hate the banks. No, we don't. We love the banks. The banks are awesome. So is it really that the economy is expanding dramatically? Or is it that the banksters, having to inflate the economy, are going to go out and lend out a shitload of money, which is going to sort of horizontally grow the economy? Just because everybody and their brother's got a fucking stock now. Everybody and their brother's got a cryptocurrency. I mean, you think 4,500's high? Ah, fuck you, man. Let's shoot for 10,000 cryptocurrencies. Why not? What are you, pussy? 10,000, fuck that. Let's go 15,000. 100,000. Every single human on this planet, 7 billion humans, must have one cryptocurrency themselves. Well, whatever. Anyway, point here is I don't know what the growth is actually going to be. My hunch is it's more sort of banker encouraged growth. Let's put it that way. Fiddy, I don't know whether, does that help you understand a little bit better here? Are you here? I don't know whether you're here or not. But this is taking the inflation out of the equation. And yeah, this is what kills me, is that Klaus, right, is trying to get your fucking money out of your hands. Get your equity. Get everything out of your hands. Why? Because he knows that fucking equity is it's gonna go up like shit. The last thing in the world you want to do is be selling your equity right now. But they want your equity. So they're gonna encourage you to sell. They're gonna encourage you to get sick. They're going to encourage you to incur staggering high medical bills so that they get your equity out of your hands. Go to the bank. Take out a loan. That's exactly what they want. So, Fiddy, I don't know if that helps. We can keep banging away. I got to fucking get out of here, though, man. Jeez, look how much. My question. Okay, so how much of total savings should you invest? In a lot of countries, they actually give you like tax incentivized programs. And usually those top out at about 20% of income. Anything above that, you're kind of, you're probably a little too much. You do have to live. And the way the system's set up is, the banksters and all that shit, they want about 30-40% of your money just to have a house. You're going to have about 30% to pay to the government. So that only leaves about 30-35% for yourself. I'd also say, too, that a lot of this is, what's your objective? Please understand that, if you do this correctly, you can take a very small amount of money and turn it into a very large amount of money very, very quickly. And a lot of these sort of things about having 9-to-5 jobs and stuff like that, that'll disappear. But until you get to that point, the number one thing you got to sort of keep in mind is what's your nut. Got to keep that nut. Keep the nut in mind. You have to meet the nut. So, that's your mortgage, taxes, food, whatever. Utilities, car, girl, condoms. What's your nut? So, my suggestion to you is, number one, go slowly. What I hear a lot of people do, especially danger, is do not go and borrow money to invest. Don't do it. You can start with staggering small amount of money in crypto, right? $50, $100. And we live in a world where Janet Yellen has told you publicly you must invest. So what she has said is get ready for some price volatility. And if you can just be patient and wait for, the bar stool people like that to be flushed out and to be crying and stuff, man, like what's happening with Ethereum right now. If you can step in and take advantage of that shit, oh my goodness, there's tons and tons and tons of money. But go slowly. Remember, your number one job is to make sure your nut is covered. And, my suggestion is you probably start off little old lady. 10-20% of your income, make sure your nut's covered. You're funneling that towards little old lady ideas. Buying at the bottom ends of ranges, good fundamental stories that you like. Don't fucking chase. Now, you're here in the level 1 program you're learning, right? Right now, you don't even want I don't even want you spending any money, right? You're supposed to be paper trading. And now you're sort of thinking, okay, well, how much money should I put towards this plan, right? You want to do 10%, 15%. Like I said, government incentivized tax programs, they top out about 20, 25%. Anything more than that, you're actually probably starting to cut into your standard of living. And maybe that's not so good. And of course, if you're really young, you'll live on ramen. Just buy your Bitcoin. Just keep loading up. But, the most important thing is location, right? Location. Don't chase. Even if you buy reload zones, even on a lot of these shit coins, and you just did nothing, well, you're laughing this year. All right. So I hope that helps. And obviously there's no absolute set number, but, general ballpark. More discussion on Q19 and Q27 from the week 2 quiz. No, you got to be way more specific than that, dude. Maybe rookie trader, if you're watching this, write down what this is, what your specific question is, and we'll take a look at it in the Broiler Chicken Show tomorrow morning. I'm running out of time. I'm going to have to do the rest of these through the daily brief tomorrow morning. Oh my God, look at this. It keeps going. You crazy people. Okay, just let's see if I can quit this. So be a little bit more articulate here with your question. I'm confused as to how to label crypto, risk off or risk on. Well, crypto is totally risk on. It is risk on 125%. So that actually solves that problem really easily. Okay. When you talk about the size of the fiat market and how this allows to move capital from one country to another, you mention interest from the government on fiat. What are you referring to exactly? You mention interest from the government on fiat. Oh, goodness. What the hell? I don't know what you're making reference to here. Allows to move capital from one country to another. That's pretty straightforward. You mention interest from the government on fiat. Well, okay, I think I know where you're going with this. How do you actually get value fiat currencies? I don't know if anybody even knows what the answer to this is. But the way that you value them is they are worth the full faith of the fill-in-the-blank government. What does that mean? Theoretically, these fiat currency pairs are trading 24/7, and when you buy a currency pair, like let's say you bought the US dollar versus the euro, what are you going to do with that money? Let's say you're an international hedge fund manager, billions of dollars, right? I mean, you could go and buy stock with that $1 billion. Remember, you just bought the US dollar versus euro, right? So if we go over here, USD, EUR, something like that. Yeah, there you are. So, boom, I just went and bought the USD EUR, paid 82.07. So that sounds to me like I sold US dollars and I bought euros, or one of the other way around. I don't know. So let's say, now I'm long a bunch of US dollars. I was long euros. Now I'm long a bunch of US dollars. Well, what the hell are you going to do with the money? Why would you buy these US dollars, especially if you're an investor, right? Hedge fund manager, I keep my money diversified around the world. Why are you buying this thing to begin with? And the answer is you're buying it to get that yield of that 90-day government interest rate. I used to have my old 1980s website. The boys told me to take it down, so I can't show you it anymore. But I used to have on there an article. Actually, I used to actually trade the currencies just based on whatever the short-term interest rates are of the respective governments. Probably just go short-term interest rates of say of G10 governments. Used to be a nice table that I used to produce for investors, and we just go shop. Wow, gee whiz, the Australian dollar's yielding 3.5%. Maybe I'll take my money out of US dollars and buy Australian dollars. Just as simple as that. But, of course, with this latest chaos in the financial services industry and everybody just taking their interest rates to zero, well, it makes it awfully difficult to figure out what the hell these damn fiat currencies are worth relative to each other. And that's why I think the markets are so screwy right now. Eventually, we should go back to a world where rates are somewhat normal. We have parts of the world that are growing, parts of the world that are shrinking, and their interest rates, the respective interest rates, should reflect that. But unfortunately, when you go through, especially, hopefully you're all now seeing. This might be a good example. No, that's not it. Hopefully you're all seeing now the importance of this, 6 different celestial events all in 1 year. Everything is being fucking thrown out the window right now with classic finance. How do you value a fiat currency if how you valued them in the past was based on what their short-term interest rates are when they're all trading at zero? It makes it damn difficult. So it's going to be kind of tough. I'm not going to sugarcoat it. It's going to be kind of tough to figure our way through the next few years. And I don't think this really hits an apex until the middle of next year. So we still probably have another year of this craziness. Then following that, then I think they're probably going to start trying to clean this shit up. Probably at that point we'll start getting things like vaccines and stuff as sort of everybody's vaccinated, herd mentality and all that shit. I don't know. Yeah, so I can't. You would think something as simple as short-term interest rate yields that would produce an image that you should be able to use, and you just can't. Look at that, nothing is coming up. And this is half the problem with these searches on internet is they're not really real searches. It's kind of a mess. But this is I think this. I don't know whether this was Australia or not. But there was a great trade here on Australian dollars back when I had my 1980s website up and running. That was it was a play on the Chinese Olympics and all that nonsense. Australian yields are about 3 or 4% higher than North American. So all you did was just buy Australian dollars, go and buy the government paper there, collect that 3 or 4%. Then when the term was done, you just brought your Australian dollars back to North America. It's really simple. So, I think that's what I'm referring to when I say interest here. It's too bad I don't have that old document handy. It would be good to have it. See if I can find it for you. Okay, do you think we can be going into hyperinflation? I don't think so, but I definitely think that the public will perceive it as that. I think that these are short-term price shocks because of the COVID situation. But I don't think it's sustainable over time because I don't think the economy can handle the hyperinflation. The hyperinflation would be predicated on the economy just having so much head of steam behind it that you just can't stop it. But I don't really think the economy does have that big of a head of steam. I think it's a reaction, sort of short-term reaction over sort of pent-up demand, stimmy checks, all that kind of shit. There's a bunch of money sitting on the sidelines, and it all fucking went violently into things like real estate and stuff like that. It was just sitting there doing nothing. But, hyperinflationary cycles are predicated on the perception that you actually have purchasing power with your wages. And I don't think labor has any purchasing power right now. And then also, too, I don't think we're going to get hyperinflation because there's actually a bunch of deflationary. Like what we should have gotten was actually deflation through this. Remember I showed you the stock market, the way that it goes up and it goes down. So they fucked around with the system right now. So what we're trying to do is we're trying to figure out what the hell normal is right now. With them printing the runaway printing of U.S. dollars here. Unfortunately, I think that's actually that's old news now. It's not new news. I don't think that's actually what you should expect going forward. But what I could see happen here is the public now is going to be told to clamor hyperinflation. So the central bankers are now going to say, well, since you want us to concentrate on inflation problems, we will, quote unquote, normalize rates, which will bring the risk out of the market. Do you see risk coming out of the market anywhere in particular? Anyone? Anyone? I see risk coming out of the market in a big way, and one particular asset that we actually said a moment ago was a risk-on asset. So you can actually see it happening right now. If we were in runaway hyperinflation, then crypto wouldn't have broken there. I hear you mentioning trading warrants a lot. What is a warrant? Is it similar to options? It is. It's not really something I want you to even consider in level 1. They are quote-unquote derivatives. They're usually part of financing deals. They're historically called sweeteners. They're sort of like, we want this big investor to invest and be a part of this financing. How can we entice him? All right, we're going to give you, Mr. Investor, a right to buy even more stock at a certain price for a given period of time. Since it isn't actually stock, it's just a right to buy more stock, then there is no cost associated with issuing the warrant. It could potentially be dilutionary down the road, but since it's just a right to do something, there is no short-term implication. And as I said, it's a great way, like if an investor's like, well, I could put my $1 million to work here, or I could put my $1 million to work there. Why do you get my money? And they say, well, we'll give you a whole bunch of these warrants too. And he goes, ooh, that appeals to my capitalist nature. A lot of times these warrants will be listed on the exchanges themselves because they're very popular. And we go in there and we trade the warrant just like it would be like trading a very long-dated option. As I said there, I don't really even want noobs or new people, level 1ers in particular. You really shouldn't be looking at warrants. They're a little bit more advanced. They're a little bit more dangerous. They do expire. They can just disappear from your account. So they're not for the faint of heart. I watched your What is a Bond and How Do They Work tutorial video that you mentioned in a lecture video, but I am not sure if I understood how the bond market works. You said that the price of one particular bond can fluctuate depending on the interest rates of the bonds that are already traded on the market. But what about the bond's remaining term? Does the bond's remaining term affect the price of the bond that would be sold on the free market because the bond has already given some interest to the original lender and will pay less interest to the potential buyer than the newly created bond? Okay, you guys get all that? Wow, that sure is wordy. Let's see if I can... I think I did a pretty good job in explaining how the bond market works there in the video. So if you have to go back and watch it a couple times, that's totally cool. But what I would just simply say is think of a bond as an IOU. Right? It's just nothing more than a loan. IOU. And let's say this bond is $100. So that is a loan for $100 that I could go into the market and say, I need $100. Somebody gonna lend me $100? That's literally what this is, a bond. Same thing. Sometimes they call them debentures. Ooh, there's a fancy word. But it's basically the same thing. It's a loan. That's all it is. People say, well, the money itself is worth something. So you're going to have to pay me a fee for this loan. And they call that interest. So the way that a bond works is that this $100 loan never changes. The day that you issue it here, $100. When it ends, we'll say this bond is, what is this? May 13th, right? May 13th, it expires. And on May 13th, the guy that lent you the $100, he's going to come back to you and he's going to say, can I have my $100 back? And you have no choice. Legally, you have to give it back to him. $100 goes in, $100 comes out. But as we said along the way, well, there's a fee for this loan. So how are we going to pay the fee? And usually they're in the form of what are called coupons. And the coupon will have like a payment. And the payment, the day that the bond is issued, let's say that the prevailing interest rates the day the bond is issued is 5%. So then that means this is a $100 bond, so that means each of these coupons is for $5. And so once a year, the guy who lent you the $100, he's going to tear this coupon off. He's going to hand it to you, and he's going to say, can I have my $5, please? Because when we did the deal, prevailing interest rates were 5%. There's a loan for $100. So that means I want my 5% interest, $5. Tears it off, gives you the coupon, you give him the $5. Bond matures. There's no inference whatsoever about any of this on bond maturity. $100, $100. No difference. This is nothing more than just the interest that's payable on the bond. So, I don't know whether that helps answer that. In this particular case, is a very, very short-dated bond. You can make this bond 1 month. You can make this bond 1 year. You can make this bond 10 years. Hell, you can make this bond 100 years. Doesn't really matter. That's all in the terms of the deal. But the day the market, right, the day the bond is listed, whatever the prevailing interest rates are in the marketplace, that's generally what they're going to set the coupon at. Because they want par. This is what's called par, face value. They want this to be this nice $100 amount. So this just makes it nice and easy. You might find that, maybe they issue the bond at 95 and the coupon's some crazy ass number. And when you do the math, it comes out to whatever the prevailing interest rates are in the marketplace. So I don't know whether that helps explain how a bond market works, but it's pretty straightforward. Once the bond's actually in the marketplace and the coupon is sat there at $5, well, if interest rates all of a sudden go up to like 10%, whoops, so bonds listed, coupon set, $5, 5% was, now all of a sudden over here, let's say, the interest rates now are 10%. And this bond's coupon is $5. Well, what does that mean the bond's price has to be in the open marketplace to reflect the fact that the interest payment, this $5 coupon, is going to be 10%? Who can tell me what the price of this bond has to be in the open marketplace? See if anybody's got any financing smarts behind them. It's a pretty straightforward question, but if you don't understand math, this is where things can really fuck you with your head. No one? No? We said that the coupon's $5. So $5 has to represent 10% payment. So what does that mean? What does the price of the bond have to be? This is why a change in interest rates can have a huge impact on the bond market. No one? Yeah, there you go, Rachel. Rachel, is that Rachel? That sounds like a girl. Right? We can't call you Mr. Finance. Yeah, that's right. So the point here, I mean, obviously interest rates don't go 5% to 10% overnight. You can see that would be quite disastrous for the bond market. But in this scenario, this bond would have to be trading at $50, right? Why? Because $5 coupon, when you tear that coupon off and it pays $5, well, remember, prevailing interest rates are 10%. So now $5 payment on $50 principal, that is 10% yield. Yeah, it's pretty simple. But that's to reflect prevailing interest rates. Price of the bond's going to collapse. Yeah, I mean, this would be a really big move in interest rates, trust me. But if you bought the bond and you did the original deal and you're like, I don't care about prevailing interest rates. I bought the bond at 100. I want my 5% yield, so I'm just going to tear off the coupons, give my $5 coupons in, collect my 5% yield, and then at maturity, this will mature at $100. What is called par. So it doesn't even matter if this bond collapses down to $50 in the open market if you are just a bond investor and you're going to hold on to maturity. You don't really care about this. It's not important. What's the rationale behind current downtrend in interest rates? Don't get it. Well, are you talking about short-term interest rates, long-term interest rates? Are you talking about credit spreads? I mean, geez, that's an awfully wide open question. So it is the bond funds that will crush you as an investor. Well, but see, that's the thing, is if you went and bought this on leverage or margin or something, then yeah, you could be in trouble. But if you just go and buy the bond, who cares? I mean, it also works the other way too, right? If interest rates go to 2.5% in the marketplace, who can tell me? What does the price of this bond have to trade at in the open marketplace over here? Right, at 10%, it had to fall to $50. If interest rates go to 2.5%, what does this bond have to trade at in the open marketplace? This is the boring economic shit that actually proves that. Actually, this Brian guy's not so stupid after all. If interest rates go to 2.5% from 5%, what does the price of the bond have to be? It has no choice. Very good. A. Estas? You got it. The bond has to be trading at $200. So, do you guys understand? Remember when in 1980, U.S. interest rates were like double digit? Does it make sense now in this scenario why they say bond investors have done really, really, really well while interest rates have gone from like double digits down to almost nothing here? Does it make sense why bond investors have done really well? Anyone? I don't know. How about you guys here in the Hangout? Do you see why bond... I mean, this is a kick in the pants. If in this scenario, and keep in mind, this is 2.5%. What does the price of this bond have to be in the open marketplace if interest rates go to 0.5%? Oh, gee whiz, that's where we are now. These bond prices have to go through the roof. So, keep in mind, all the bankers, all the bondholders, holy fuck, have they done well. But nobody ever talks about that. It's terrible. So, I don't know. I hope that helps answer that question. I mean, obviously, it's a very difficult question. Just keep bugging me. We'll get through this. I mean, I hope that... when I read this, it almost sounds like you're spinning in circles. You're just going around and around. So, just watch what I said today. Watch that video again, maybe. Let's attack this again tomorrow in the daily brief. Do I understand correctly that, for example, all 10-year bonds with different interest rates and remaining time are traded on one 10-year bond market? Problem is the bond market's OTC, man. I mean, it's huge. I mean, bonds can be everywhere. You can go into your bank and the bank can issue a bond in the form of a mortgage. That's basically what a mortgage is. It's a bond. So, bond market is ridiculously large. It's not really like it's like, this is the one place where you trade. The banks will set like mortgage rates and benchmarks, and there'll be indexes and stuff that the industry will follow along. And then, to add insult to injury, go watch that Big Short guy and the stupid fucking Chinese guy there eating the sushi going, well, we create synthetic CDOs. So these are CDOs on CDOs on CDOs. So where the hell does that market trade? Right? And the guy's like, oh my fucking God, this world's going to blow up. Because all of this shit's OTC. Roman says, now I understand. Oh, Roman, was this you who asked this question? I hope so. If so, how does a buyer get a bond with a specific interest rate and time remaining? He is choosing. Well, every brokerage house should have what's called a bond desk. And every brokerage house should have access to a bond inventory. And you literally just call up your bond desk and you say, can you send me a list of the inventory you have in your account that I can possibly shop from? Obviously, brokerage houses who have bigger inventories, they are going to have bigger client bases. Brokerage houses that have shitty inventories, they are going to have smaller client bases. Like Lehman Brothers. Anybody remember Lehman Brothers? They basically built their entire business model being bond brokers, and that destroyed them. Way to go. So really, it's just a question of you actually dealing with a broker. And the interesting thing about the bond market is technically there is no commissions. So there's no incentive for a guy to sell you any product. The way they get paid is a spread basis. So they'll have, like, say, a bond. Like here, this is a really easy cut and dry example. 9 times out of 10, what they'll do is they'll, maybe this bond is sitting at a $5 coupon, and it's $100 face value, and maybe prevailing interest rates in the marketplace aren't 5%. Maybe there's something like 5.1, which technically should mean that this bond should trade at slightly under par to give you that 5.1% yield, right? Because it's $5 coupon. But they'll sell it to you at like $5, and they'll take the difference. That will be their payment. But you as a customer, you never see that. I know that gets complicated. We don't need to open up that can of worms. But the point here is that you should be able to call up your broker, specifically tell them, look, I want a AAA government quality bond. I want X percent, or you say, what's prevailing rates today? And he'll say, well, 3.2%. And you'll say, fine, I want, AAA government quality bond that's 3.2%. And I need, you create bond ladders. So let's say my 3-year paper ladder is empty, so I need 3-year paper. And so then he goes in his inventory and he says, okay, I've got government of Nebraska paper. I've got some corporate paper. CalPERS people are giving a half-decent 3-year paper now at your 3.2. I've got City of Detroit, Michigan has got some muni bonds that are yielding that, et cetera, et cetera, et cetera. And so you just, okay, well, I'll take the Nebraska paper. Don't want to touch that fucking crap paper out of Michigan, stupid auto manufacturers. Whatever, right? And that's just the way the capitalist machine works. All right, 15. What time? Oh, shit, it's already after 2. Okay, well, I'm not going to deal with these today. Let's, somebody remind me. Well, Monday's usually, we've got Sjord, eh? And then, I don't know whether Jamie's going to turn up. Be interesting to see what the hell happened to Jamie. Anyway, I have to go to Liam. I have no choice. Liam takes precedent here. So I think we're going to have to leave this for here today at that. And somebody remind me, maybe Mr. Pimp. Mr. Pump, sorry. Mr. Pump, if you could remind me we'll pick off here either Monday or, let's see how we're going to do this. I'll go highlight. Or next week, we'll pick off here, okay? So if somebody can remind me. I think we'll try and do it tomorrow, okay? So somebody remind me to try and do it tomorrow. But I got to go. The boy is calling. I know I talk endlessly with you guys here on YouTube. And it seems like I don't have a schedule, but there's no debating with Liam. So I'm going to hop here. Hope you guys enjoyed that presentation. Didn't really talk too much market here. I'm sorry, guys. I think I talked a little bit Bitcoin, didn't I? I've got my stink bids working, so I am actually trying to buy some. Also trying to buy some of the various different cryptocurrencies. Still a little bit early, I think, on stocks. So I don't really want to come in on crypto stocks just yet. Where the hell's the... Oh, yeah, I guess it's here. Yeah, I don't think there's a, if anything, just wait. I'll do an update on the public YouTube video tomorrow on this. I'm not really in a huge hurry, but I wouldn't be surprised if this is our trading range. So back up to about 42 and as low as 28. That wouldn't surprise me for the next little while here. And actually, that's basically what's happened here, right? Dead cat bounce back up to 43, right back down against the bottom. Actually, it might even be a cute little trade there. But I am also trying to get in on this damn Ethereum. So might have gotten a fill here. I don't know whether that was... did that happen while we were talking? This is an hourly, so I don't think so. No, I guess that was happening this morning. So I've got bids down here, and then the one that I do like is this LTO, and I actually did do some buying there. So I have actually gotten some fills here today. So anyway, so there you go. Okay, I got to hop. Wish me luck with Liam. Thank you, E.A. Estes. You read my mind. Sorry, it's a slow. It's a bit of a smaller one here today, guys. But we started a bit later, and I think I'll do the dovetail with the show tomorrow on the site. So hey, if you're watching on the free broiler chickens video here later on today, pop on and you're like, man, I want to see the rest of these answers. Pop on the free 30-day trial, and you can be in the daily brief with us tomorrow as well. And of course, all you OGers, I have 30. What did I say? I have like 50, 55 firm commitments. I think technically we could raise all the money we need for the Hawaii project now, but I still technically I still have 30 slots open. I'm asking OGers who have made money and have done really well in the market. I'm not prospecting any people that have not been sort of like TRI people. These should be strictly TRI OGers that have done very well and are very comfortable and are liquid, and you want to be like like I'm calling them like cornerstone donors to this Hawaiian project to give us a physical location going forward. So if you are interested in that, please let me know. Like I said, not too many slots left, but I definitely would love to have all of you part of that experience going forward. And I would be technically doing these broadcasts out of that location once that's up and running. So, okay, have yourselves a great day. PMA for the win. All the best. I got to get the hell out of here. And bye for now.